All these years, we have been having different income tax slabs with associated tax rates together with some deductions and exemptions under different sections like 80C, 80D, for example. All the taxpayers have been using these provisions to lower the income tax. This is the old tax regime. In Budget 2020, the Indian Finance Minister proposed additional tax slabs with lower income tax rates but removed all the deductions and exemptions that have been in vogue for years. This is called the new tax regime. You, as a taxpayer, have the option of choosing either the new tax regime or the old one while filing the income tax. However, in spite of the fact that this has been in vogue since the financial year 2021, many of us are confused and still not sure as to what option to select. Welcome to Nana's Learn Better. Use this channel to enrich your knowledge in personal finance to take informed decisions. Do subscribe to the channel if not done already. Before we get into the meat of the subject, let's understand how these two tax regimes differ from one another. 1. The new tax regime has brought in more tax slabs with reduced tax rates than the old regime. For example, if you consider the income tax slab for the assessment year 2023-24 for individuals below 60 years, NRIs and HUFs, you will notice that there are 7 tax slabs in the new tax regime against the 4 in the old one. If you see closely, the tax rates have been rationalized. For example, in the old tax regime, you would pay 30% tax if the income is more than Rs 10 lakhs. However, in the new one, you pay only 20% if the income is more than 10 lakhs but less than 12.5 lakhs, 25% if the income is between 12.5 and 15 lakhs, and 30% only when the income is more than Rs 15 lakhs. Apparently, it looks like that you may pay less tax in the new regime. Let's see if this is true in the next couple of minutes. The second key difference is that unlike the old tax regime, you will not be able to take advantage of the various deductions and exemptions in the new tax regime to try lowering the tax incidence. In the old regime, for example, you can make use of the exemptions like house rent allowance, leave travel concession, company leased car, food coupon, etc. besides the standard deduction and other deductions towards PPF, EPF, NPS, ELSS, insurance premium, home loan repayment, etc. under various sections of the Income Tax Act. But these are not available once you opt for the new regime. The third difference is the simplicity in income tax calculation and submission of IT returns in the new tax regime. The old regime is complex to calculate the tax. Besides, you need to keep ready all the supporting documents for return submission and a possible random audit by the IT department later. In contrast, it is straight and simple in the new tax regime. No need to remember and adhere to the provisions of various sections of the Income Tax Act. Just pay the tax for the applicable tax bracket. Okay, let's come to the point. How someone decides which tax regime to opt for. 1. Make a list of all the exemptions that you are going to avail of. Keep ready the relevant documents and certificates. 2. Make a similar list of deductions that you are planning to avail of. It will be easier if you make the list for each of the sections like 80C, 80D, 80E, etc. 3. Calculate the income tax under both the tax regimes. And 4, compare and decide on the one which is beneficial to you. Let's do a sample calculation. You can make use of the numerous online tax calculators or download some of the Excel-based ones to manually calculate. Let's understand how this works out when the taxable gross salary is say 15 lakhs. Let's assume that under the old regime you are fully exploiting the 80C limit of Rs 1.5 lakhs. Besides paying an additional Rs 50,000 towards NPS under Section 80 CCD, you are using the limit of Rs 75,000 under Section 80D towards health insurance premium of yourself 50,000 and your parents for 25,000. The interest received on fixed deposits, including savings accounts, amount to rupees 10,000, which would qualify for deduction under section 80TTA/B. The professional tax paid is rupees 2,400 and the standard deduction is rupees 50,000. When the tax is calculated under old regime, you can see that you would need to pay a tax of rupees 1,70,850 after factoring in all the eligible exemptions and deductions. This is about 11.31% of your gross income. Now, if you look at the calculations under the new tax regime, you will see that you would need to pay more at rupees 1,98,120, that is about 13.12% of the gross income. Hands down, we can say that income tax filing under the old regime is beneficial. Let's take another example. This time, let's consider that your gross salary income is rupees 7 lakhs. The professional tax paid is the same at rupees 2,400. There are no other deductions except the standard deduction of rupees 50,000. Now, if you look at the calculations, in the old regime, you would pay a tax of rupees 43,700 against the new regime in which the tax payable would be rupees 33,800. Clearly, you should be opting for the new tax regime. Okay, is there a simple way of deciding which tax regime to opt for? Some sort of guidelines. In general, if you are someone with an income bracket between rupees 5 and 10 lakhs with nil or lower deduction and exemption claims, you may benefit from the new regime because of lower tax rates. It goes without saying that if you are someone who does not believe in these savings under sections like 80C, etc., then go for the new tax regime, which is simple and easy. But there is no straightforward answer if you want to save maximum tax by considering all the deductions and exemptions. You may need to actually calculate the tax under both the options, as there are umpteen number of provisions with various permutations and combinations. For example, if your taxable income is only rupees 6 lakhs and your deduction and exemption is only rupees 50,000, you can choose either of the two. But if your deduction and exemption is slightly higher, say rupees 75,000, then you can opt for the old regime, as you will be saving about rupees 5,000 in income tax. If your taxable income is rupees 10 lakhs, with rupees 1 lakh as the deductions and exemptions, then you can go for the new regime. At the same time, if that amount is rupees 2 lakhs instead of 1 lakh, then opt for the old regime, thereby saving rupees 13,000 in tax. At the top end, say if your income tax is rupees 25 lakhs and if your deductions and exemptions are about 3 lakhs, then go for the old tax regime. Else, for example, if the exemption and deduction is just 1 lakh or 2 lakhs, then you would be better off with a new tax regime. It's possible that you could pay less tax across all the tax slabs under the old tax regime when you claim home loan interest under section 24 together with other exemptions and deductions. Okay, once you have opted for a particular tax regime, will you be able to change it next year? Yes, you can change this option even every year if you are a salaried individual taxpayer. All the taxpayers with income under the head house property, salary, capital gains and other sources can switch between the old and the new tax regime every year if required. However, the other taxpayers whose income is under the head business or profession can switch back to the old tax regime only once in their lifetime after they moved into the new tax regime. This is all about what tax regime, old or new, you should consider for filing your income tax for the assessment year 2023-24. See you in another video. Till then, this is Narayanan Viraya from the channel Nanas Learn Better.